Hello everyone, how's it going? Have you ever wondered about the following question? Why is it that all the news are good about Palantir and yet its share price seems to stagnate? In other words, why aren't we talking about Palantir taking over the moon as we speak? And instead, we're hoping that it's going to hold the $20 level, or we hope that it's going to go beyond the 25, like it tried maybe, 50,000 times by now. So, we're going to try to have a deep dive into Palantir today and to see whether this is a stock for you. And even if it's a stock for you, whether it's a stock for you that you should be buying now. Hi everyone, I hope that you're having a great day and lots of profitable trades in the market and coming. So as we know, the job market over the past few years has seen a lot of ups and downs. The companies that were once considered safe havens for those seeking employment have been reducing their workforce, and it's been a traumatizing experience for many of us who are concerned by this change. The inflation has also been eating away everything that we have in banks. And, even speaking of banks, do you really want to put everything that you have in fiat currencies, right? That's also one of the many question marks that people must be having these days. So when every source of certainty is about to melt away, we must use that opportunity to remember that we got to take a step back and to start working about our own financial independence. Now, in order to have our own financial future in our own hands, we got to find the growth opportunities of tomorrow by ourselves and to seize the ones that may multiply our capital that can increase, the money available for later investments. We got to find the golden goose, simply put. And for many people, Palantir is one of those. So Palantir is now much more than just another tech stock asking for your money in exchange for a lot of good promises. It's a major company playing the role of a measurement of whether capital is hungry for risks. So it has enough clout and mystery to arouse the market's curiosity, and a lot of people tend to follow the trend. It's a company that people would often view as the risk appetite alongside Nvidia, Tesla, and so on. The fact that Palantir may rise and fall with the tidal waves of risk capital is limited, but it's a very useful prediction tool. And this is why it's always recommended to keep it on your shortlist. So in today's video, we're going to take a deep dive into Palantir and to see if you should be buying. Now, before the video continues, I just want to take a moment to thank every single one of you for coming to my channel and who stay. And I hope that you will enjoy your stay and to come back for more content. If you like what you see, please consider to like, comment, and to subscribe to my channel for more of these to come. With that being said, I hope that you're gonna enjoy my analysis, and let's get started on today's video. So, right now as we speak, Palantir is trading at around $21. To be honest, in terms of prices, things haven't really changed much, okay? And chances are, everything that I've said before regarding, the loss of momentums, regarding people would prefer to take profits, the lack of any sort of positive catalyst, and so on, are still true. Like, they still hold up. But we have now another reason to explain why it's having a very hard time to go beyond 25. In fact, as we speak, it may have a little bit of a problem going beyond 21, okay? Apparently, the reason is momentum. The reason is momentum is key to Palantir. It's not how fast it's currently going. So in other words, it's not how well it's currently doing. It's how much better it's still gonna do in the years to come. Because people are not buying the present. People are buying the future. People are buying a future where the multiplier of Palantir, so, the market cap or their value to the profitability is no longer as high as it is right now. That's what they're looking for. So, because every time if Palantir comes back and be actually, people, we're going to have a slower than anticipated growth. Well, this is when the same people who pushed Palantir from $8 to 25 are going to be like, you know what? I'm not too sure. I would prefer to like take it slow, take my sweet time, and to take profits. More importantly, to take profits. So the bearish tendency, as days pass, tends to stay. Like people are not really in a rush to come back. On the other hand, a lot of people are on the fence. People like myself. We may not have gone heavy into Palantir, but that doesn't mean that we're not interested by it. From time to time, I do take a look at the charts and wonder if we're gonna have some more volatilities coming up. My feeling is, in the short term, it's probably gonna be a grind lower. In the long run, we're gonna have some significant volatilities. Just I don't know in which direction. In fact, both should suit us. Like we shouldn't be disturbed by the market either way. Maybe one of them is not going to make us money, but neither of them should lose us a lot of money. That's my point. And this has everything to do with, trading psychology, risk control, and so on. But we're going to come to that in a bit. Right now, we're just talking about the current price action and what explains the current price action. So, this is what we have to say about, the present. On a more fundamental level, so if we take a little step back, Palantir has always gathered a lot of interest from retail investors ever since it went public. It's in fact one of its potential criticisms, because it just means that institutionals have always been a bit more hesitant into pouring in money into Palantir. Like, of course, by institutions, I don't mean Meet Kevin. Okay, like he has like 5% of Palantir. I'm like, oh, with that kind of price, it's kind of interesting. Like, of course, unless his ETF went live when Palantir was trading like at $10 and he went 5% right then. But I highly doubt it. My feeling is it might have been added over time, and right now it's somewhere in the high like 10s or even 20s. Like that's my best guess. So it's possible that despite its business model, the sector that it's in, and the reliable revenue streams and cash flows, Palantir is perceived to be a little bit too expensive by the institutional capital. Like the presence of retail means that, it's interesting. Like people are buying it, people are talking about it. That's probably an interesting sign. But it's known to be a more volatile stock than many others with a lot of, with more institutional participation. So the sentiment is very reactive with investors who want to capitalize on every single little trend and momentums and that, everything that we can catch about Palantir, and we want to bank on it. Sometimes it works, sometimes it doesn't. So the fact that the company has a pretty interesting technology, might be one of the reasons why we want to buy it. The fact that Palantir has gone from having a net loss to having a net profit definitely has been used to massively buy up the share price. In fact, this, if anything, is a valid reason. It's a pretty good reason why people want to capitalize on a positive net flow, because that would mean, and we're going to talk more about it in a bit, this would mean that the future of Palantir is almost guaranteed. Like, it's a company that can stay on its own 2 feet, and we don't have to worry too much about its short to medium term future. Now, regarding its journey in the market, there have been prolonged periods first bullishness and then bearishness, and now I would say it's bullish once again, okay? Until, of course, if Palantir reaches back to like $15 from where it's at right now, then we're maybe talking about something else. One significant aspect of its price movement is the correlation to the fundamentals and the macroeconomic news cycles. Every time something goes well, like people have great outlooks for the US economy, people have great outlooks about the global stability, and stuff like that, or there's no war, there's peace, supply chains around the world are flowing. If that's the case, then Palantir is going to be doing pretty well. On the other hand, if that's not the case, and I would suspect that it's not the case as we speak, then unfortunately, it's going to be the other way around. Another major factor for Palantir is how rare is money, or how expensive is the rent of capital, called the interest. So the interest rate. Right now we're having like 5% interest rates left, right, and center. This has not been the case for many, many, many years. This is why I would argue that as long as the interest rates stay high, we're going to have some problems in convincing people to go ape into stock like Palantir. Because they all want to stay in their savings account, They're collecting 5% for doing nothing. Why would they change their mind? It would be kind of difficult, in my mind, to actually do that. On the other hand, thinking about Palantir from the perspectives of news is pretty limited, because they want to go in the same direction of the stock after the fact. So if they see that a stock take off, they're going to be like, oh yeah, by the way, Palantir is so awesome. Look at this, this, and that. On the other hand, if Palantir comes down, they're going to publish an article with a headline, is Palantir still, you know what I'm saying? Like, is Palantir still interesting? Should we stop trusting, the tech sector, or Palantir, the great illusion of our century? Like, I don't know, I'm just making things up, but you see what I'm saying? I feel like the news headlines, they can turn very quickly, and not always based on the facts. It's based on what the current market sentiment is, and then they're gonna twist their stance in order to go into the same direction. So right now, Palantir has been able to maintain their bullishness for the short and medium term, and the marginal increase and the marginal interest from the market has been lacking, to be honest. The stock has shown a lot of resilience in the recent sessions, though. So I'm not saying, go short on Palantir. That's not really smart. You can either go long or stay on the side, right? Right now, I'm choosing the latter, but that has to do with my own risk profile, or my own criterias, or just different kinds of factors that determine if one should be buying a stock at one given time. In my case, I just don't have enough capital around to pour more into Palantir at the moment, but it doesn't mean that this is the case for everyone. So having said all this, it's possible that we're going to be entering into a period of time where the volatility is going to be lacking for a few weeks and even a few months. In the same period of time, it would be recommended if you buy some options contracts and to play the straddle strategy. Basically, what does it mean? You know how options have, you can buy put options and you can buy call options, right? Well, just buy the out of money, meaning they're pretty far from the strike prices. The strike prices are pretty far from the current price, so that these options themselves are pretty cheap. Buy a couple of those and just wait till one of them gets super expensive. Okay? And this would assume that during that period of time, there's going to be a volatility play. Because I don't have a crystal ball, and you should never trust any crystal balls in this world. Even when people tell you that they have one, they can see the future, they can feel and taste the future, don't do it. They're probably lying. And if I ever say that one day, it's probably just because, one, I'm desperate for views, and two, I might be drunk. So, because we don't have a crystal ball, we can't see and predict the future. I would say bet it on both sides. It's not gonna be out of imagination to say that Palantir may go up to like $35 or 15. Okay, in my mind, there are fundamental and other kinds of reasons that may see Palantir both much higher and much lower. Like, either way, there are explanations. If it goes higher, well, it's because AI is going to take over the world. If it goes lower, it's just because, it's too expensive. US is not going to cut rates anytime soon. Meanwhile, every single retail traders is going to lose their patience. At the same time, oh, you know what? They rely too much on Uncle Sam cutting checks. It's not the private sector feeding the money to Palantir. So, yeah, I'm not sure about it. Oh, and meanwhile, there are two other potential risks. Number one, legal contingencies. Remember, Palantir analyzed data acquired somewhere. The last time that I heard this kind of firm operating, of course, this is not like the only one, but it kind of dates back to Cambridge Analytica, and we all know what happened afterwards, okay? Palantir doesn't just do like the do no evil stuff. They just do stuff. Like, they may not be evil, but some of the entities employing them, I'm not sure if they really care about whether they're evil or not. Let's just put it that way. In the meantime, sometimes Palantir is pretty straightforward in their attempt to claim ownership and rights to use data sets that other people may disagree. When it's a company, we can just say, oh, it's just a commercial dispute, right? Somebody might be right, somebody might be wrong. It's your words against mine. But when that other entity is the U.S. Defense, like Department of Defense, I'm not so sure anymore. Like, that move was pretty bold and a little bit risque to my mind. Maybe a little bit too much as well. So it's that kind of stuff we got to watch out for. And recently they got a contract from NHS, and people were like, you know what? Let's not give it to Palantir. Let's give it to somebody else, because CIA seed funds. We're not too sure. This guy really likes to go to Davos and whatnot. So this is number one. They might get sued. They might get sued for how they use and how they acquire their data. The other thing is just, right now they're very popular because they're into data, they're into AI. What if one day these things are no longer cool? What if one day the attention of the market, especially the retail investors, most of whom hold Palantir shares, it's the other way around. The majority of Palantir's shareholders are retails. So what if one day their attention span is as short as a TikTok video? And be like, hey guys, you know what? The coolest sector to invest in is XYZ. Brackets, not EV, not fintech, not weed, not not AI, not data analytics, but I don't know, deep space discovery, or geothermal. I'm making stuff up, but you definitely get the point. Like, what if one day the trendy thing to say is no longer um, like what we're currently invested in. Do you guys remember Lucid? How a few years ago it was super popular? Well, look at now, you know? Do you guys remember Hylian? I actually quite like Hylian. Well, look at where it is now. So it's never a guarantee. And the fact that this is so much a narrative play may not. So, right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. All right, so having said all this, what is my opinion on Palantir? Personally, I would say that you going in, you would have to assume that Palantir's technology, the sector it's in, the sector it's trending on, so AI, are going to be relevant. Okay, for external reasons, you've done your research, you believe that these sectors are going to be relevant. Long story short, I personally kind of do. I think that data analytics is not going to go anywhere, and I think that AI revolution is just the beginning. And because Palantir has the brain power, they have the data set, they might be in a pretty good niche in this, ongoing sea of change. So because of this, I would say that on a personal level, the long-term outlook remains bullish. On the other hand, the short-term one, first of all, I don't like to catch any falling knife. So because of this, I would rather see where Palantir is going to go before investing in more, or at least massively more at the moment. Like if Palantir goes down to 15, that might be a more interesting, that might be a more interesting entry point for me to start buying more. If it goes up to 30, then at least it's a statement that we're no longer talking about the $25. And by then, it's probably going to be because there's something different that has occurred, that people have a different outlook about Palantir. So this is why I would prefer to wait before committing more capital. It could go to 50 next, for whatever it's worth. So this is why I would say that it's a pretty smart move to save the majority of your unallocated capital for later, but to keep Palantir on your shortlist. But going in, you would have to assume that the sectors that it's in are relevant, are going to remain relevant, or become even more relevant in the future. So, having said all this, I would recommend maybe a maximum allocation of 10% of Palantir shares over the course of multiple months or even multiple years. I believe that this might be an interesting little stock to experience with, and that it might be just one of the golden goose that we need.